How's everybody doing today?
Great. Fantastic.
Doing good.
Cool.
Excited to be back. Week 2.
Yep, week 2, episode 2. We're still here.
Yes.
Um,
Jesus has not come back yet.
Yeah. We have another day on Earth, which is always good.
Yeah.
Not that we won't be excited to finally see the kingdom, but
Yeah, absolutely.
Before we get into some of the stuff that I have on my screen, does anybody have any questions? Let's say continuing from last week.
Not really. I think it's just continuation of what we talked about last week, and then whatever you have in store for us today, Kevin.
Okay, cool. Well, I guess we can start off talking about inflation and deflation. So, I know the viewers and the listeners can't see what I have on my screen.
We don't have viewers yet, but yeah.
Yeah, listeners.
We have listeners, but not viewers.
But anyway, on the screen it says inflation refers to a sustained increase in the general price level of goods and services, while deflation is a sustained decrease in the general price level, meaning prices are falling. So
I'm hearing a lot of back and forth. Where are we currently at? Like, do you honestly know? Deflation, inflation.
yeah, I feel like we're still going through a decent bit of inflation, and I expect that to continue for a while, unfortunately.
How long do you think that'll take place? Roughly.
It's honestly hard to say, but
it
didn't
didn't happen. It happened really fast.
Yeah,
And I know getting back to healthy is going to take a little longer.
Yeah, and honestly, inflation is sort of an ever-present thing for the most part. Like, if an economy is doing well, typically average inflation every year is supposed to, or where they want it to be, is about 3%. But here in the last few years, we've certainly been higher than that, especially in some categories more so than others. I know a lot of people, for example, have been complaining about egg prices, as well as I'm sure plenty of other things.
So would you consider that a monetary inflation or what? Cost push?
Yeah, basically what inflation means to me, is like the value of your money is going down over time, or like your purchasing power is going down. And the way that we combat that is to invest. And of course, as you probably already know, my recommendations are mainly, I think stocks and real estate are a pretty good way to combat that. They're not the only options, but they're good options. And the reason, if you ask why stocks, I feel like people still think of stocks as some sort of game or some sort of unnecessary gamble. And they certainly appear that way at first, but the reason why I like stocks is because what they're supposed to be at their core is they're supposed to represent real businesses that you can trade on the market. And they are, well, not all of them, but some of them give you a dividend yield, which can also be helpful because you cannot always depend on the share price to go up in value over time. And so a dividend yield gives you an opportunity to still collect cash flow, even if the price per share isn't doing what you want it to do.
Gotcha.
Kevin, I got a question. What do you consider? I know everybody's situation is going to fluctuate. It's going to be different from investor to investor. But what do you consider a good percentage to shoot for, I guess, of investment, maybe weekly or monthly? What do you consider a good percentage to shoot for of income? I'm talking about.
I know it's. I'd say, especially in an environment like now, the higher the better. But I realize it's going to most people are going to struggle to do. Hey, can y'all still hear me? Or am I on
Yeah.
mute?
Mhm.
Okay. Most people are going to struggle probably to do more than 30 to 50% of income annually. And y'all may even be thinking like, well, that's really high, but I've heard of people trying to push 70% of their income into investment, but certainly for those of us that follow Christ, I would say 70% is getting pretty high because we want to make sure that some of those resources are going into other appropriate directions, whether it be tithing or just charitable giving. But I would certainly try to stay at least I don't know, anywhere from 20 to 50 if at all possible. But even if you can only do 15, I mean anything at all is going to help.
I can tell you one thing: anybody that's investing 60 to 70% managing their money really well.
Yeah.
Yeah.
Yeah. It's really hard to and that's especially in today's world. We have so many bills and subscriptions and different responsibilities that it's really hard to meet that goal for sure. Yeah. So I guess I'd say anywhere from 15 to 50 should be pretty. I mean, I know that's a wide gap, but I guess I'd just say do what you can do.
Gotcha.
You definitely have to do something because otherwise, the value of your money is continually falling over time.
I mean, I think anything that you vest percentage wise, it's gonna, require of us a little discipline. And I think if you really want to do it, you could do it.
Sure.
Yeah.
No matter what percentage it is. Like if you want to, I mean, of course, your own finances and what you're, receiving and then what's going out. Of course, you can be disciplined if you wanted to.
And I would also say, like, I would avoid the mentality of just invest no matter what it is. Like, I want you to invest, but I also don't want you to just jump into anything and everything. It's also important to know what it is that you're investing in and do your due diligence and your research and make sure that it's not going to be something that's going to hurt you over time or something that's going to be against your values and something that you feel is unethical.
Right.
I think a lot of people get caught up in that too. But yeah, did that answer your question, Chris?
Sure.
And I know I can't think of the names of platforms off the top of my head, but I know that there are some investing platforms that allow you to set up a recurring investment. But I personally don't do that just because I would rather decide exactly where everything is going. So I guess I have a little bit of a need for control on that one.
Well, that's one of the things that I know that Dave Ramsey is big on is making sure that you write down to where you can see where your money's going, where you're spending all your money. And I know that it's an eye opener for a lot of people when they actually sit down and write these things out. When they actually see where their money's going instead of just spending, without writing it down where you don't know.
Yeah.
Yeah, I think he's got an app. If I'm not correct, please correct me. I think he's got an app called Every Dollar. Is that it?
Ramsey does?
Yeah, I think it's called like Every Dollar, and it's an app where you track your money and you hook up your account, and it basically goes into these different types of spending funds or saving funds or whatever you have set up. That way you can calculate for every dollar spent. Hint the name, every dollar.
I haven't looked into his specific app, but I've seen some other ones. Like I've heard of another one called Rocket Money, and it used to be called Truebill. I've actually used that one for a little bit, but yeah, any app or software that you can get that's reasonably priced that allows you to have visual on all your expenses and income is definitely a good idea. I definitely,
Yeah.
I definitely think that's a really good idea.
For sure.
Um, it's much more important than people give it credit for to be able to keep track of everything. Because, and another thing I do personally that I would recommend people do is have more than one bank account. Even if you don't have a ton of money to scatter out in different directions. And the reason why I say that is because if you only have one, especially one checking account where all your bills go, you'll find yourself bleeding quickly. Or most of us will, because you want to have a spot where whether you get paid from a job or your business or a dividend yield, you want a place to put the income where you, because if you just have that one account,
Yeah,
I
that
mean,
makes sense.
your bills are going to take away from it. And then some people's
Daily expenditures, stuff like that.
some people
Yeah,
feel like,
separate all that.
yeah, you don't want to,
That's a good idea.
yeah,
I ain't never thought about that.
a lot of people advertise having a savings account, and there's nothing wrong with that, but I would rather have multiple checking accounts, because a savings account is usually going to lock up your money for some period of time. I'm not saying you can't put some in a savings account, but
Yeah.
I would just use an additional, and what I do is use an additional checking account as a savings account, because then I can transfer that money anytime I want to into
Right,
new
without having-
investments. Or,
Okay.
yeah.
I can tell you from experience, the thing to do is to be disciplined and not touch that stuff when you put it there. I had an account one time with a company I worked for, and in the very beginning, I had to I designated money to go into a savings account that automatically came out of my check. And to be honest with you, I forgot about it, and I didn't check it until a good while later, and I was shocked at the amount of money that was there because I just forgot about it. But you don't, I heard somebody had a video just last week, and they were asking the question, if your savings account could speak to you, what is the one thing it would say to you? And somebody put a comment there that said, "Why do you keep putting money in me and then next week take it out?"
Mm-hmm.
So that's one of the things that I think people need to be disciplined with too. You can't have a savings account if you're just going to treat it like another checking account.
Yeah.
Yeah. No, I definitely agree in that you should let it keep building and not withdraw it. And that's, to me, that's the whole reason of having another account, is so that you're not bleeding from every direction.
That's right.
Which is what happens if you only have one, in my experience. Because even when you're not getting hit with bills, subscription, mortgage, whatever, you're gonna feel like it's burning. I feel like most people are gonna feel like it's burning a hole in their pocket or wallet, and they're just gonna spend.
That's one of the things about being disciplined. If you have to have that. I think putting money in your savings account, I kind of feel like ought to be the same attitude you have with investing, that you put it in there for the long term.
Mm-hmm.
Yeah. Yeah. And especially when it comes to another thing a lot of us don't think about is from time to time, you're going to have emergencies come up. And if you're a homeowner, some of those emergencies might end up being pretty expensive. So you always want to have enough cash available to, in the event of an emergency, or you can't work for a little while, or whatever the case may be.
What's the typical savings you should have? Isn't it like according to how much you make, you should have double or triple, like monthly, in your savings account?
Yeah, that's what a lot of people say. But I'd actually put a number on it, and I'd say as things get more expensive or inflation continues, the number's going to go up. But a lot of people, I don't know, or some people may be shocked or feel some kind of way when I say this, but I would try to avoid having less than 20,000. Like, I know maybe this seems like a lot for a lot of people, but especially if you're a homeowner, I'd say shoot for 20K minimum.
Gotcha.
which may seem like a lot, but it's important. You don't want to run into an emergency that just completely knocks your life off the rails.
Yeah, I
But
got you. I think I saw it's like 62%, or maybe a little more than that, live paycheck to paycheck. What would you tell them? You know, and I know there's probably a lack of discipline in a lot of that when it comes to paycheck. What would you tell people who are maybe living paycheck to paycheck? What would they need to cut out first to be able to build that appropriate savings?
yeah, I mean, I would say when it comes to that sort of thing, I don't agree with Ramsey on everything, but I certainly agree with him when it comes to
Snowball thing.
if you're broke, yeah, you need to immediately start looking at what are my biggest expenses and
Yeah.
cut when and where you can. And I would also say don't be afraid to look for new and better income sources. Like I'm not going to tell everybody to, don't think I'm going to tell you to go out and quit your job, but
Tell us.
but I mean, you definitely want to make sure that you're being paid fairly. So if you feel like where you're at right now, you're not being compensated at a level that is livable, it's time to start looking elsewhere.
I got you.
What are some of the things that we think about whenever you look at back to investing? Are you always looking for, say, new companies coming out, that kind of thing? How often do you search on new companies?
Yeah,
I mean, I think, and I just real quick, Kevin, I
Mhm.
ran across a new investing platform or something you can invest in for smartphones called Mode Mobile. Investing in smartphones, the new era, or whatever like that.
yeah,
And I was talking to him like, what do you look for when you do that?
yeah. When you look at new investments, including Ryan brought up something to me earlier called Mode Mobile, which it looks like they're accepting investments for a new type of smartphone. And I would say when you look at these new investments, it's good to try to find, it may be called the prospectus, or like in this case, I see a Form 1A, but try to find some kind of form or documentation that tells you more about the details of the investment. Like you want to know, is it common stock? Are you going to be getting some sort of special shares that give you more security? There's usually different classes of stock. You might have class A, B, C, and you might have some stock that gives you some sort of cash yield and limits your downside risk. In the case of this investment, and I've only looked at it briefly, but it looks like they give you common stock, and there's nothing wrong with common stock, but when you're investing in something new and that's a little more inherently risky and something that hasn't been brought to the public market yet, I would just say do a lot of research and due diligence and make sure that you're comfortable investing in that, because if you're only receiving common stock, there's typically very little you can do if your investment goes sideways. So let's say, the company went bankrupt or something before they ever even made it to the market. For most people, your investment's just going to be gone.
When you say made it to the market, what are they doing right now if they haven't made it to the market?
Yeah, well, they always try to accumulate investment before ever going public. So in order to go public, you have to submit documentation to something called the SEC. And this is another term that you may want to jot down or just keep in your memory. But the SEC is not, I know a lot of you are probably thinking football league. It's not the football league.
I completely missed that, but now I got it.
Yeah, the SEC that we're talking about is, as a matter of fact, it's on one of my tabs right now when I'm looking at this Form 1A, but it stands for the Securities and Exchange Commission.
Not Roll Tide.
Yeah, yeah, not the Southeastern Conference that so many of us in the South love to watch. This this body sort of governs new additions to the market. And remind me of the question again because I lost my train of thought there.
I don't remember either. Tim, Chris?
Oh yeah, and Tim's not here today, so Ryan, don't invoke Tim's name.
Yeah, I'm sorry.
He's banned. No, I'm just
I think Ryan was asking, what does it mean that it hasn't gone to market yet?
Yeah.
Oh yeah. So
SEC.
yeah, that's right. About pre-market. So when something goes to market, it typically has something called an IPO. Okay, so SEC is Securities and Exchange Commission. You have to file paperwork with them, but IPO stands for Initial Public Offering. And I'll pull that up on screen real quick. Well, if I can get it.
What did you
typed
say
in.
that was again?
IPO.
IPO. Okay. What does that stand for?
Initial Public Offering.
I got you.
And so Google defines that as a company's flotation on the stock exchange. I do not like that definition at all.
How would you define it?
It's basically just
Right there on the right.
yeah. It's when you're first putting your company on the stock market is I guess what I would say. Wait, hang on. This might be the Investopedia. I like Investopedia. They usually have pretty good descriptions. So Investopedia says the process of offering shares of a private corporation to the public in a new stock issuance for the first time. Yes, that is a much better definition. I like that one a lot more. So you may want, that's another one you may want to jot down if you can't remember it, as IPO. So anytime you're dealing with something, and I'm not picking on mode exclusively, but because I mean you can make a lot of money with pre-market investments like this. You just have to try to screen them as carefully as you can. But these are also where you can make the most potential money. But I think we discussed the other week sort of the higher the risk, the higher the reward. So something like this, even though it's a smartphone and people love smartphones, I would still consider a very high risk investment because first off, they're going to be competing against Apple and Samsung and Google, three of the largest corporations in the world. So it's definitely there's plenty of room in the market for competitors, but your competitors are something serious.
I think probably any time you go up against a company, and all three of those do, that have billions of dollars to invest, it's got to be a daunting task.
Yeah, it's definitely a David and Goliath scenario. But that's not to say that you can't land a good shot.
Sure.
But yeah,
I mean, it's typically when you get it big, right? When you risk it and it actually makes it to market.
No, yeah, you can definitely potentially do very, very well on something like that. But what I would say is I would still try to allocate a responsible amount to something like that, meaning that I would never overextend myself into the riskier side of things. So it's okay to allocate some of your investing funds in a direction like that. I just would be careful not to overdo it. But yeah, those can sometimes be your biggest winners.
I'm going big.
Yeah, and but the other reason I say that too is because, especially as a new investor, I don't remember if I mentioned dividend yield yet, but it's always, I think I did a little bit. It's always a good idea to have a dividend and a dividend yield, especially for new investors, because if all you are depending on is share price appreciation, you're not always going to get that. And sometimes the market goes through periods of turmoil that you have no control over.
Yeah.
And so if you're only relying on price per share appreciation, um, it's usually going to, it's just going to make life a little bit more difficult for you at times because, and also if all you're depending on is price per share appreciation, that also means that the only time you're ever going to make money is when you sell it. And I would say from a long-term investment mindset, it's ideal to be able to hang on to, if you find something that you feel like is a good investment and it's going to be a good investment for a long time, I would say you want to ideally hold on to it for a long time. So yeah.
I mean, if something's gonna be making money, I'm hang on to it as long as I can.
Yeah, and the other thing about that too is on average when you scoop up a new dividend stock, the yield is only going to be like 3 to 4% annual, which, you know, to most people are like, oh, it's nothing. And that's
Yeah.
true. Like you're barely hovering at the inflation rate with that. But what people don't see is the compounding effect, because typically a company that's doing well is going to raise their dividend over time.
Mm.
And if you can get in a young company and it gets much larger and it pays a dividend, then maybe at first you have a 3 to 4% dividend yield, but then let's say 10 years down the road, maybe your yield on your original investment is now 20, 30, 40%,
Yeah.
which is, you start getting above 20, 25%, then you're doing better than just about any type of, well, significantly better than any type of real estate.
What's average for the real estate?
Oh, if you get really lucky, and most people don't nowadays, I would say real estate, and maybe people would even disagree with me on this, but if you can find a good cheap property, typically the best you're ever going to do, in my opinion, is going to be anywhere from 20 to 30%. But most of the time, you're not even going to get that because you're going to have to take on debt.
Mm.
And
You're talking about people getting up there with Nancy Pelosi's percentage.
yeah, well, I'm 20 to 30% sounds like a lot, but it's really not. I mean, it that's a pretty good amount, I guess, as far as something being, if you're,
Well, when you compare that to the, like, isn't the average something like 6%? Because that's pretty good comparing it to the average return.
yeah, I mean, it's not bad. I'm just saying you can potentially go much higher than that with stocks, but yeah, it's definitely still better than average. I would say, or I want to say the track record of the overall S&P 500 for, and I'm estimating on this, I want to say for the past 100 years has been 10% on average
Oh, wow.
annual. So, and most people would consider that really, really good. But yeah, I would say anytime you can exceed 20, you're generally doing really, really well. I guess the reason, since I've been doing this a while now, even 20% doesn't sound all that high to me, just because, you know, if you're taking on more risk, you expect to be compensated even more than that for a higher level of risk. But yeah, 15, 20 and above, you're definitely doing really, really well, and better than the majority of people, more than likely. And I'm sure I've said this before, but ideally you want to be in the middle of risk and reward. So you want to take enough risk to make a decent return, but you don't want to take so much risk that you tip over or, you know, ruin yourself, obviously.
Sure.
And too, you know, I think you can agree with me on this, Kevin and Chris, that, you know, you're just not going to jump into this knowing exactly what you're going to do. You're probably going to lose some, probably going to gain some, but it's going to be just a time of learning and discovering, you know, what works best in the market for you and things like that. Am I right?
Yeah.
It's going to take some time, because I don't want people to be able to just jump in this and be like, oh, I'm going to make money fast. You know, it's typically not like that.
Yeah. Yeah, it's I agree with you on that. I was reading one of my notes. I remember you asked me something about how to deal with risk last week,
Mm-hmm.
and uh, I felt like I had something additional to tell you about that, but I can't remember what it was right now.
You mean you lost your notes too?
I've got them right here. I just wasn't detailed enough in my in my note. Um, but I think what I was going to tell you is just that uh, I'm sure I told you last week to just sort of be careful and take it easy at first and invest in like an ETF or something. But I guess really learning to deal with risk and get over the fear of risk is to just, I would almost say, sort of like some people do with teaching somebody how to swim in a pool. Like you just kind of have to jump in and remind yourself not to panic when things don't immediately go the way that you want them to go.
Well, I think everybody wants, everybody's shooting for that story, where they invested $5,000 with Apple in 1987 and didn't touch it, and then, all of a sudden they're a millionaire.
Mm-hmm.
But I know every story doesn't work out that way. But I guess the moral of that story is if somebody did invest that kind of money at that time and just left it alone, how fortunate and blessed they are now.
Yeah. Yep. And we think of, you think of Apple, Amazon, Microsoft, and those guys. And yeah, some people did really, really well on those. But it's also important to remember that investments on that scale are few and far between.
Sure.
But I mean, that's the goal for all of us is to, run into something like that. It's
Well, and at that time, and for years and years, Apple was really a stepchild behind Windows for a long time
mm,
before they really took off. Of their smartphones and the iPod really helped with that, and just the market really turned around for them. Uh, they were really, again, like I said, they were the little brother for a long time.
yeah, I'm gonna see if I can see when the first iPhone came out. Let's see, when did first uh wow, that's later than I thought. So
Yeah.
we didn't have the first iPhone until June 29th, 2007, apparently. I feel like that is the point. I mean, not that Apple didn't have some success prior to that, but I'm sure, and I could be wrong, but I'm pretty sure that the iPhone is what really started ramping up the success for Apple.
Sure.
Because, like Chris said, I was pretty young in the '90s, but from what I remember, PC was a much more dominating platform.
Absolutely.
So I think developing that iPhone and getting used to making advanced technology that's small, I think really helped them because once they had to optimize that little phone to do all the things that it does today, it helped their, I'm sure, technology get all the more advanced and helped the Mac and
Yeah.
whatever other.
No question. In the very beginning, also, I was frustrated and aggravated with Apple that they had so many proprietary things, whether it be software or hardware. Uh, they just didn't work well with others. But in the long run, it caused a lot more money to be poured into Apple whenever their products didn't work well with others. And, you had to buy whatever Apple offered, which caused them to make more money. And I guess that's a risk they were willing to take, but it sure paid off.
Mm-hmm. Yeah, no, they seem to have found a pretty good recipe for success because the way I see it, I mean there are I think plenty of smartphone options out there, but as far as I can tell, the only major competitors that can really keep up with them are Samsung and Google with the, I don't know, Android, Galaxy, whatever.
Right.
Um, it seems like all the other competitors are much more minor. So yeah, Apple has definitely carved out um, their own market somewhat. I think another key to their success too, in my opinion, is they made their user interface very easy for most people to understand. I mean, just looking at this image right here, you can see that their app icons are colorful. I mean, you can clearly tell that one's a calendar, one's a text message icon, and not that other smartphones haven't implemented that now, but and I could be wrong about this, but I feel like Apple was probably the first to, just have a very easy to use user interface for the
But one of the
average person.
things that was really impressed on me when you talked about the investment that that Ryan brought up just a second ago, for me anyway, it's hard to judge where technology is going for me, and that would be more. Investing in a technology company would be way more of a risk for me because I can't. I really don't know where technology is going.
No, I agree completely, and I love technology, and I love to invest in it when I can. But yeah, it's predicting. Obviously, none of us have a crystal ball or can predict the future completely, so it's definitely a very difficult task to be able to identify in what direction things are going all the time. I mean, I'm sure most of us would agree that most of the billionaires in the world want us to go towards a world of artificial intelligence because they don't want to have to pay workers. And that, I'm sure I'm not the only one that makes a little bit nervous. I don't know what the world would look like if.
Well, realistically, I think it's headed that way, whether we want it to or not.
Oh, it's absolutely headed in that direction. But what concerns me is, what are we going to do when everybody's out of work?
Yeah, that's right.
I guess we'll have no choice but to cross that bridge when we get to it. And I hope we're still. Maybe people would disagree with me on this, but I hope we're still a ways away from that because that sounds like a huge obstacle to try to overcome.
Sure.
But yeah, we're definitely, whether we want it or not, AI is happening for sure. I think it's just a question of when, not if.
I thought it already was.
Yeah, I mean, well, we have some degree of AI for sure. Yeah, there's still definitely plenty of room for improvement, but we're I want to say at least at level 4 or Tesla's at level 4 of autonomous driving, and I feel like
Yeah, I'm currently looking at one right now.
I feel like when we really you're looking at a Tesla.
Yeah, I'm building one right now.
You're on the Tesla website?
I'm building a Tesla on a Tesla website.
Yeah.
I'm multitasking.
But yeah, I don't own a Tesla or whatever, but from what I understand, they certainly have one of the market leads on developing autonomous driving. So I think I read one time where they're at level 4 and supposedly level 5 is full autonomous. So they're close.
I think he does have those because I think Elon has showed those a couple times, right? It's one of his showings.
Well, I know recently they have a robot that they showed that they're trying to bring to the market, and I know he's been trying to develop, and maybe he already has some 18-wheelers, autonomous 18-wheelers, which that would be a really good investment for sure. Well, it's also kind of scary though because I don't know, I'm thinking like Rex. How
I think about iRobot with Will Smith.
yeah, that too.
Well, Musk with his AI app, which is Grok, is the name of it. He's currently has the fastest and most powerful AI app right now as well.
Really?
So he's doing his companies do very well. He usually is at the top of his game in whatever he decides to invest in.
Yeah, he's definitely got. He's one of the few people that I've been able to see handle having so many irons in the fire. Like he definitely seems to be a really good multitasker. There's no way I could ever see myself taking on the amount of tasks that he's taken on.
Or is he a robot?
Yeah, he could be. I don't. I mean,
Speaking of Tesla, would it be a good time to invest in Tesla right now with all the stuff that's going on, or no?
um, I'm kind of a numbers guy, so I'm gonna take a look and see what I see.
I mean, it's dropped significantly.
Yeah, so pulling up the chart, it definitely has dropped significantly. Um, the current market cap right now, which is the worth of or the current value of the company, is 706 billion,
Yep.
and it's been as high as I think it's been over a trillion. So it definitely has come down, but and I know people would disagree with me on this because the PE ratio doesn't account for growth. Speaking of which, there's another term called PEG ratio that I think does help you account for growth a little better. But if we simply look at the price to earnings ratio for this, or the PE ratio, it's 110.54. So, and like I said before, that's not all encompassing or all indicative of how expensive it is, but that's just saying that based on current earnings, it would, without any improvement to earnings or revenue, it would potentially take you like 110 years to make your investment back. So, but a company like Tesla that's always acquiring new technology and new businesses, it's you're going to be alive to see a profit on your investment, I think. But another thing that I think people don't realize is it's easy to get excited about really big companies like this that are doing really big things, but typically the people that make major investments in companies like this are already very wealthy billionaires and hedge funds that are also in the hundreds of billions of dollars. So for most of us, for the average citizen, it's difficult to say invest around your net worth because you're not going to find businesses that are publicly listed that are $1 million or less very often. So, you're always going to have to, as a regular citizen, invest higher than what you're worth. But 706 billion is much higher than most of us are.
Well, and part of the
worth.
drop right now is politically based.
Yeah.
If Elon Musk wasn't part of the Trump organization right now, his company would be doing a lot better. But this is backlash right now, a little bit from who he aligns himself with politically.
Yeah, he's definitely a little less popular right now than he has been. He's with Doge and all that stuff going on. So I'm sure
I mean, I commend the dude.
Well, and one of the things that we have to remember, I think, and correct me if I'm wrong, Kevin, when you're talking about investing, people have these aspirations of, like we talked about, investing a small amount, $500, and then waking up in a week or two and having $1 million. But that's not the way that it works. And generally, the bigger returns are the bigger investments. Am I right?
Well, when you say bigger investments, do you mean the size of the company's
Well, I'm
bigger?
talking about your risk. If you invest big, you make big. If you invest small, you make small.
Yeah, generally speaking, I'd say that's true. Yeah, for sure. The more you're willing to risk, the more potential reward. And like I was saying earlier, even though that sounds really appealing to most of us, I always think it's best to try to be somewhere in the middle as much as you can, balance, or just finding balance, because it's one thing for a single person to take on a ton of risk, but if you have a family and kids and stuff like that, you certainly want to have a little bit more of a safety net than
Sure.
a single person would. But
And there are these outliers sometimes. My son invested in a really really small stock in a cryptocurrency one time, and in a few months, I mean, I'm talking about he invested like $20,
Mhm.
and in a few months, he went back and looked at the investment, and he had like 1,500 in his account. It had grown that much,
What was
and
his initial investment?
like
Do you
20
remember?
something dollars.
Oh yeah, he did good. He did real good.
Yeah, but I mean, those are few and far between. Those are outliers. Those are you know, when you looked at it initially, the stock price was like 0 point and then like 10 zeros and
Yeah,
and a 12 or something, and but it had grown. I mean, it wasn't even a penny yet, and he had made $1,500 off of that $20 investment.
yeah. I would say that investments like that or results like that are typically few and far between, but not necessarily because the opportunities are rare, but to me the difficulty is just finding opportunities like that because you have a lot of small companies and small currencies that you could potentially invest in, but kind of like we were talking about earlier, not everything's going to make it. So
Sure.
you could easily buy, you know, cow patty coin and, and it could you could lose all your investment, or you could have been lucky enough to buy into Bitcoin early. And I don't,
And oddly enough, I think this was Dogecoin that he invested in. That was that was heavily invested in by Elon Musk.
yeah, yeah, I remember Doge. I think Elon's probably responsible for some of the growth in that coin for sure.
Right, right.
'Cause he definitely championed that thing a little bit. I don't know where the value on Doge sits right now, but the last time I looked at Bitcoin was around 85,000 a coin, which is
Sure.
pretty crazy.
That's right.
And I know, like we were saying last week, a lot of people get really excited about crypto, and it can potentially be something helpful, but um, it's just important to remember that to be careful, because the the big the big results and the big opportunities are just sometimes hard to identify.
Sure. And just to remind, from last week, I asked the question, uh, if you would invest in crypto at all, and you said no.
Yeah, I mean, um, typically I end up being at least invested some just by proxy of owning a company that may invest in it. And I have at times held a little bit in my own in an account somewhere. Um, but the main reason I would say that I don't invest in it much is because, and again, like I said before, a lot of people would disagree with me on this. Since it's since it's a currency, I view it still as just I'm swapping one form of money for another form of money. But that being said, the US dollar is still just a fiat currency itself. So I mean, I certainly wouldn't say that you're doing a lot of harm swapping from the dollar into a cryptocurrency because I don't completely trust the dollar either.
Sure.
I would just say if you are going to do that though, make sure that it's something that you can easily exchange back into dollars and something that's going to be very liquid for you and easy to move around. But I certainly wouldn't treat it as an investment in the same regard as stock or property because something's a currency, it means that typically there's no real business behind it. Um, it may not be registered with the SEC. There's no way for you to look up financials and see what the earnings are because there are none.
Sure.
um, but that's not to say again that it can't go up in value. It's just that there are no there's nothing for you to look up to see how the company's performing. So it's just it's just a much more risk based category, I guess, where you're just hoping for that price per share appreciation type of thing.
Along those lines, about that about investing in things like that. Do you take notice, for instance, when you can see who's investing and who's not, that kind of thing, and who's getting out of a stock, who's getting in? Does it concern you? Do you take note of specifically like when investors will all of a sudden take a huge amount out of a stock?
Yeah, I do look at that sometimes, and I would sort of say it's situationally dependent on how concerned I get. Um, like for example, a lot of people will watch Warren Buffett's moves and kind of move based on what he's buying and selling. But another thing that I would tell people is, oftentimes when you see what somebody has bought or sold, it's usually, I don't know the exact time frame, but I want to say it's usually like a quarter after it happened. So you can't see it like as they're doing it per se. Like,
I think it's 90 days.
yeah, 90 days sounds about right. So about a quarter. You're not gonna see what he bought or sold for, and unless it's happened at least a quarter ago. Yeah,
And the reason I know that is we were talking about the app, I think, last week, where a guy created an app that would allow you to invest like Nancy Pelosi, like some of these other congressional people. And that's how they realized how much she was making on her investments. And but you only find out what their moves were 90 days after they did them.
yeah.
You know?
Yeah, that's it's not to say that you can't still piggyback off of what they're doing and make some money, but typically it would be ideal if you could see it the minute that it happened, and obviously you're almost never going to be able to do that.
Sure.
And again, it's not to say that it can't continue going up, but typically, but anyway, to get back to your question, or tell me what I don't know what's up with my memory today. Tell me what your
No,
question
you're
was
good.
again.
No, we were talking about being able to follow. Now, my original question was, does it concern you when you see someone take a huge amount and sell off out of a stock that you're in?
Yeah. No, I would say I would, depending on the amount, I would definitely pay attention to that for sure and do some more digging. Like, especially if it's, let's say somebody sold like, 15, 20% or more of their investment in that stock or that company, that would certainly be a red flag for me to look into it more, because why are you all of a sudden dumping that much?
Sure.
I would view that as being a sign that there's something going a little bit haywire there, especially if it's a billionaire or a large hedge fund dumping that much. I mean, but that's not to say it may not always be a bad sign that something bad's happening in the company. It may just be that hedge fund or that billionaire is just, decided to take profits and redirect that investment somewhere else. So it's not a guarantee of something bad happening, but it can be. I mean, you just have to sort of research into that company specifically and see
Sure.
if there's a bigger problem there. And on that note, one way that you can check a company's financials is you can, just go into Google and type in a stock. Like, somebody give me an example of something you'd want me to look up again real quick.
Berkshire Hathaway.
Okay. Yeah. So I'm looking at the Class B of, well, actually, let's see what Class A is looking like. It's probably going to blow your mind. Well, hang on. You see that number right there?
Sure.
So, is that crickets chirping? So Ryan can't see this right now unless he pulled it up on his screen, but Berkshire Hathaway Class A stock right now is $783,684 a share, which probably sounds absolutely nuts to most people.
It's insane.
Um, and the reason I like for people to be able to see that is because most of the time you only ever see stocks that are priced, I don't know, let's say $1 all the way up to several $100s. And the reason why Berkshire Hathaway Class A is so high is because it never did a split. And I'll probably save explaining to y'all what a split is for another day. We'll talk about that another time. But yeah.
I know that it's happened to Walmart several times. They've done that.
Yeah, splits typically happen to allow more investors to be able to participate in an investment because obviously most of us don't have, something like $780,000 to spend on one share of an investment.
Yeah, I thought that Bitcoin was expensive. This is insane.
Yeah. And the other reason that, and I'm not just trying to continually bash on crypto, but the other thing that concerns me about crypto and Bitcoin is nobody I've ever talked to or met can tell me why it is that Bitcoin has achieved such a high price like that. Like I can't come up with any foundation. Most people would argue, I guess, that there's a finite amount, but I would say, okay, so there's a finite amount. How does that justify something?
Well, I understand that the point about a lot of people investing in a company, how its value would increase. But how do you determine the value, especially of a cryptocurrency like that?
Yeah, that's the problem is I have that same question and I've yet to see anybody answer that question.
Right, I got you.
Which is why I tend to shy away from it. But if anybody can ever come up with an answer to that for me, I would definitely hear them out. I don't know the answer to that one myself, but I would love to know the answer.
But we originally came here to look at what now?
Just the crazy share price of Berkshire Hathaway.
Got you.
But Brian,
but then with a big company like this with a big share, you do get those huge fluctuations like we see today in the stock price, how it fell.
Yeah. Actually, though, I would say typically with the really large companies that are, above $5 billion, typically volatility isn't nearly as bad as it is in younger, lower price companies. But it goes back to our conversation earlier of, those younger companies are going to have more volatility, but because they're smaller in value, the risk is higher, but the potential reward is also much higher. So not to say that a big company like this can't still see some good gains, but typically if you're trying to make really big money, and people would disagree with me on this, but I'd say it's just math. The smaller the company, the quicker you're going to potentially double your money. But I mean, larger companies are also going to have more broad access to new investment opportunities that some of those younger companies may not have enough money to participate in. So
sure,
I'd say a mix is always a good idea. And really, if you're going to be invested in really large companies like this and you're not a billionaire, which most of us aren't, it's better to own them within an ETF like the S&P 500, or like I think I mentioned SPY last week. Hey Ryan, what time are we at right now?
1 hour.
1 hour, cool. So I guess now that we're in an hour, we can kind of revert over to scripture side of things, if that's okay with y'all.
Sure.
So scripture for today is the parable of the talents. We are in Matthew 25 verses 14 through 30. And I'm gonna read this whole thing to y'all because I feel like this, I mean, all of the Bible's important, but in regards to money and investment, this is an important one for us. For it will be like a man going on a journey who is called, well, let me see what version we're in. ESV. I'm going to try to find New King James real quick. Let's see. Okay, here we go. For the kingdom of heaven is like a man traveling to wait, yeah. Let me start over. For the kingdom of heaven is like a man traveling to a far country who called his own servants and delivered his goods to them. And to one he gave 5 talents, to another 2, and to another 1, to each according to his own ability, and immediately he went on a journey. Then he who had received the 5 talents went and traded with them and made another 5 talents. And likewise, he who had received 2 gained 2 more also. But he who had received 1 went and dug in the ground and hid his Lord's money. After a long time, the Lord of those servants came and settled accounts with them. So he who had received 5 talents came and brought 5 other talents, saying, Lord, you delivered to me 5 talents. Look, I have gained 5 more talents besides them. His Lord said to him, Well done, good and faithful servant. You are faithful over a few things. I will make you ruler over many things. Enter into the joy of your Lord. He also, who had received 2 talents, came and said, Lord, you delivered to me 2 talents. Look, I have gained 2 more talents beside them. His Lord said to him, Well done, good and faithful servant. You have been faithful over a few things. I will make you ruler over many things. Enter into the joy of the Lord. Then he who had received the 1 talent came and said, Lord, I knew you to be a hard man, reaping where you have not sown and gathering where you have not scattered seed. And I was afraid and went and hid your talent in the ground. Look, there you have what is yours. But his Lord answered and said to him, You wicked and lazy servant, you knew that I reap where I have not sown and gather where I have not scattered seed. So you ought to have deposited my money with the bankers, and at my coming I would have received back my own with interest. So take the talent from him and give it to him who has 10 talents. For to everyone who has, more will be given, and he will have abundance. But from him who does not have, even what he has will be taken away. And cast the unprofitable servant into the outer darkness. There will be weeping and gnashing of teeth. So, my opinion on this is that it sort of goes back to our original conversation of the love of money being the root of all evil and not necessarily money itself. Although we do have to be very, very careful about greed and envy, God expects us to be good stewards of what we have. And one thing about us in the United States is almost all of us, even though we may not view ourselves as being wealthy, most of us are, throughout the world would be considered haves as opposed to a have not. So we are called to be responsible with what we are given, is mainly what I think God is trying to tell us here. You guys have any thoughts?
Well, I think verse 21 is probably the main thought here. Where he says, "Well done, good and faithful servant. You have been faithful over a little. I will set you over much.
Yeah.
Enter into the joy of your master."
Yeah.
It matters what we do with our money.
Yep.
It matters where it goes.
And this example is money, but I would say my cords tangle up. Forgive me for a second. I would say this applies to many other things as well. Just if God sees that he can give you responsibility in a certain area and you handle it well, I think he's going to reward that, in my opinion. But
No, for sure.
I don't know exactly how, and I don't know, just like I don't guess any of us know exactly what heaven's going to look like, but yeah, I just if we believe in a just God, I'm sure he's going to find a way to reward people that have been responsible and good.
Well, and I think he also, although this is not the particular context of this parable, he's talking about literal talents of gold and that kind of thing, but also the figurative talents. He expects us to use our figurative talents that he has given us to invest in his kingdom, to invest in him.
Yeah.
and we don't sit on those. We don't not use the talents that He's given us. We
Right.
always use any kind of talent that He's given us to win souls for Him and to help people be better disciples.
Right. I mean, if he gives us something, I think the expectation is to use it for his purpose.
Amen.
Yeah. Yeah, I agree. And I'm glad you reminded me of the talent thing again, because and part of the reason why I wanted to go over the scripture is because if you don't read it very carefully, sort of like the love of money thing, it comes off sounding like we are talking exclusively about skills, which, as Chris said, utilizing your skills is important too. But when I first read this, I immediately thought that this scripture was talking about skills exclusively. And then I did some more digging and prayed about it. And, I feel like God led me to do the digging, and I realized that talent, I believe in ancient Greek, translates to something like a unit of measurement, which then took me to precious metals like gold and silver,
Right.
which were supposedly the currency of the time.
Sure.
But yeah, talents or skills, this definitely applies to skills too. You shouldn't waste anything that God has given you. I forget where exactly in the Bible the iron sharpens iron verse is, but it goes something like, as iron sharpens iron, so one man sharpens another. And to me, or the reason I bring that up is because just like we all have different skill sets, to me, that Bible verse means that we ought to be coming together and fellowshipping so that we can utilize one another's skills for the benefit of all, because we're all going to have different skill sets for the most part.
And in the larger context of what we're studying here, it also goes over into investing in God's kingdom. We are told, just like he said here, just like the verse Ryan mentioned, his Lord said to him, "Well done, thou good and faithful servant. You were faithful over a few things. I will make you ruler over many." This can be taken into the context of the new kingdom too. Lord tells us over and over to lay up treasures in heaven and don't lay them up here. That's he of course is speaking of our heart's commitment. We don't want to have our heart's commitment dedicated to things that are just going to pass away here, but to invest in His kingdom, and that's part of what I believe is being discussed here in this parable as well.
Yeah. God, to me, what God is telling us is, yeah, I've given you money in the economy as a way for you to help yourself, but don't get caught up in thinking that it's more important than I am.
Amen.
Ultimately, God always has to be number one. He refuses to be number two to anything, which I think is plenty fair. Because
and we also have to keep in mind anything. We're talking about literal investments on this show. Any money we were to make back is still God's. We may keep a portion of ourselves to keep ourselves going, to keep ourselves taken care of. I mean, the Lord has blessed us with, like, for instance, He's blessed me with a wife. I have to invest in my wife. He blessed me with kids. I've got to invest in my kids. He's blessed me with grandkids. I've got to invest in them. Those are also investments that the Lord has given us to take care of. And we also have to keep that in mind in the bigger scheme of things as well.
Yeah. I would say God and family and all that stuff always comes first. I mean, money is just ultimately a means to an end. Although it's, with mankind, it's very popular because it's in the modern world that, just it takes money to do just about anything. But we still just have to remember that it's still just a means to an end.
And which, again, is one of the reasons that the Lord told us that we could either love Him or we could love money,
and not both. Yeah,
and we would love one and hate the other. And in a big scheme of things, also, we see this all over our world today, especially in the West, that where we're rich here. it's very easy to see people who are completely committed to money or they're committed to God, that they're not both.
Yeah,
Yeah.
and the other problem with being too committed to money is it, and I think the reason why the Lord warns us so much about it is because it's so easy for people to all of a sudden give up their principles and their values to jump into something that is not
Amen.
God glorifying. I'm not. I don't want to get into naming a bunch of specific examples, but I'm sure we could all come up with more than a few. But yeah, your ethics and principles, especially biblically based principles, it's important not to lose sight of those because we can sell many things, but if we sell our soul, we might not be able to get it back.
I don't know. I'll use this for example. I know we're on the spiritual part of the show today, but let's look at Target for example. Are they a publicly traded company?
Target. Let me see, because I'm actually not even sure. I would imagine they are, but let's find out. Yeah,
Okay.
yeah, they are.
See, even if I knew for a fact that Target was going to make a lot of money, I'm just not going to invest in them because I don't like the things they stand for. And we were talking about that earlier in today's show and last week. They're one of those companies that I just would not invest in, even if I knew that they were going to make money, because I don't like what they stand for.
I got you. Yeah, um I I don't know a lot about Target, but I definitely agree that, like I've said before, it's important for things to be ethical. Um and I'm sure there are plenty of companies that would not be God glorifying that we probably shouldn't get involved with. But yeah, I would say, you know, we only get one soul and one chance to be repentant and to get accepted into the kingdom, right? So we certainly don't want to involve ourselves in anything that we feel like is going to put our soul at jeopardy, because we've only got one and it's very important.
Amen.
But with that being said, does Ryan, what are we now, like an hour and 10 or something?
Hour and 12.
Hour and 12. Does anybody have any final statements, questions?
No, sir.
All right. Well, I guess that does it for us on episode 2, and we'll see you next week for